Good day and welcome once again, guys. It's Monaco Daniel. In today's video, we are going to be looking at multiple time frame analysis. I know this is a very interesting subject to a lot of traders. It's one thing that almost everyone wants to talk about, everyone wants to know how to do correctly. So in this video, I've been making out time to look at multiple time frame analysis, the supply and demand way, or at least how I look at multiple time frame analysis as a supply and demand trader. So with that being said, I'm going to head right into this video, but before I do that, don't forget to like the video, subscribe to the YouTube channel, as well as leave a comment below. Like the name implies, multiple time frame analysis is an approach to trading. Basically it's just an approach to trading that requires you to look at multiple time frames to get a bias. So you don't just trade off a particular time frame, you don't just look at your supply or demand zone on a particular time frame and then conclude on a bias based on that. The essence of multiple time frame analysis is to give you a better picture of what is going on in the market. You could trade off a particular time frame and still be a very great trader, but as far as I'm concerned, you need a confluence of multiple time frame to get a better picture of what's going on in the market, understand market structure, as well as take entries and exits. So that is it with multiple time frame analysis, just basing off your market bias on two or more time frames. So with that being said, let us head into multiple time frame analysis as supply and demand traders. Now remember I said up from the previous videos that as supply and demand traders we basically trade 4 market structures, although I trade just 2 out of these setups, but that's not something to get into in this video. We are going to talk about that in subsequent videos. So with that being said, what do we look out for when doing multiple time frame analysis? So in doing multiple time frame analysis, there are no standard time frames to do multiple time frame analysis. It depends on your style, your type of trading as a person, and your kind of trader. Basically, I'm a swing trader, so I do most of my multiple time frame analysis from very high time frames. I go as high as weekly, monthly time frame, and could even go as low as 1 minute time frame. So it just depends on you as a trader. But for the purpose of this video, I'm just going to be picking 2 time frames, maybe daily at 1 hour or daily and 4 hours, whichever. But I'm just going to be picking 2 time frames to explain this. Okay, so let me look out for some obvious supply and demand zones. Here we have a drop base and a drop. Okay, this is the price chart for Bitcoin at the moment. Let me look out for another supply zone. Up here we have a drop base drop. Okay, I think look for a demand zone. Okay, I think I'll start off with this. Now, in doing multiple time frame analysis, a lot of traders call this top-down analysis, but I love to use multiple time frame analysis because you could navigate several time frames whichever way you want to. You can do it from smaller time frames to higher time frames to smaller time frames. Whichever way just suits you as a trader is fine. So one thing to know is, in doing multiple time frame analysis, it is always very important to take into account the higher time frame picture, because higher time frame buyers are usually stronger than lower time frame buyers. So you want to first look at what is going on in the higher time frame and then probably take your entries or do whatever it is you want on the lower time frame. So I have marked out the zones on higher time frame. Here we have a drop based drop. I'll switch to 1 hour. Okay, now after marking out your higher time frame zones, what you want to do is you you are looking for a point of entry. You are looking for a point of interest. You don't want to trade off. You don't want to be looking at this daily zone to take your entry. You don't want to be looking at this zone. This is kind of too wide as a zone. If this zone is valid, this is a supply zone that has been valid actually. Looking at this particular candle here, you see we got a rejection from $39,000 per Bitcoin down to $34,000 per Bitcoin, and we are seeing something that looks like a rejection that you can't be so sure of right now. When looking at these zones, you don't want to get in too early. You don't want to miss your entry and all of that. If you're looking at getting in into a short position up here, for example, some people will tell you go in at 50% of your base candle. I don't do any of that. I just refine my zone to get smaller entries, to get more precise entry as my point of interest, and then that is why I take my trade off. If you are getting into this trade, yeah, let's say for a short, and then market decides to go up to this point before coming down. Well, if you don't have your psychology in check, you might end up closing a good trade in loss, or you might end up setting a tight stop loss and then market goes straight to invalidate your stop loss before going in your direction. So this is why I just want to refine my zone to smaller time frames and then make entries based on my interest in the smaller time frames. So like I said, if we take this, when you take your charts to smaller time frames, what you want to be looking out for at this point is quality supply and demand setups. Remember, we trade just 4 setups, 4 structures as supply and demand traders. But you want to look out for, this is a supply zone, so obviously you want to be looking out for quality supply setups in this zone, not use this instead. Okay, so you want to be looking out for quality supply setup in this zone. Yeah, so which supply? I think this is a good supply setup. Okay, we have a drop based drop. This looks like a drop based drop, but no. Okay, I'm just going to extend this. Then look at what's up. If you take it back to the daily time frame, you see that we got almost a more precise entry from here. We got almost a more precise entry from here. Now, there are cases where you switch to, I used daily and 1 hour for this. There are cases where you switch to smaller time frames and then you find multiple zones within the bigger time frame picture. You find multiple setups within the bigger time frame picture. You want to refine this even further, go down to even more smaller time frame. You are going to, as you go down to smaller time frame, you begin to find out that some of these setups doesn't look more like a quality setup, so you want to ignore them. Now, it will be more reasonable, to be more logical, taking off an entry anywhere within the zone than looking to take an entry from the whole of this daily time frame zone. That is why multiple time frame analysis is important. So I'll pick out the next zone. Up here we have the supply setup. Once again, I'm just going to repeat this. Okay, I'll go straight to the daily, to the 1 hour time frame. Okay, now on the 1 hour, the first thing I notice is this supply setup down here, drop base drop. This is a very quality setup. Looking at the impulsive leg, this sell leg down here, very strong impulsive leg. We have kind of a neutral base candle, and then it go to sell before this base candle. So I'll still look for more setups within this zone. I think here we have the drop base drop as well, and well, it's just these two for me. So I'll take this down here to make it a bit more precise, and then back to my daily time frame. And then, okay, on the daily time frame, there's something interesting going on there. Now, on the daily time frame, you see that market didn't just react from the whole of this supply zone. Yeah, we got a quality supply setup here that's caused the reaction we saw here. But this big sell off that happened here didn't come from the entire of the zones. It came up from this 1 hour quality supply setup. Okay, so you can see we came right into this and then the sell off down. One last, this is a demand zone. Let me switch to 1 hour charts. Now, on the 1 hour, I don't seem to find anything too interesting along the daily base candle. So I'll try to go lower than 1 hour time frame to see if you can find something, you can find some quality setup. Okay, we have the drop, base drop here. We saw the reaction. We have a rally, sorry, a rally base rally here, and then the reaction. We have a rally base rally there. Okay, and I think lastly we have something like a rally base rally. This is close to the zone. I'll take this into account as well. Okay, now once again I'll switch back to my daily time frame. Let's watch what happened from this level. Okay, we got a perfect reaction. Prices dropping down to this level. Almost immediately we saw a huge buying pressure from here and then just bounce up to this point. Yeah, so you can do this on whichever time frame you want, depending on your style of trading, depending on you as a trader. Supply and demand trading works on whichever time frame that you trade. It works on any time frame, as low as 1 minute and 5 minutes time frame. This is effective. It's just up to you to do it, and it also works well in any markets. I believe it works in any financial, any liquid trading market. Let me look for something, maybe gold or silver. Okay, okay. Now this is a daily supply zone. I'm just going to do this. Okay, this is the price chart. This is daily price chart for gold against the US dollar. And here we have, okay, let me take it one at a time. Now I'll switch once again to the 1 hour time frame. Here, on the 1 hour, we have a setup up here around or within the zone, within our supply zone. Yeah, we have a setup up here. Let me look out for something quality again. We have something that looks like a drop base drop right here. Look at what happens here. We just came right to this touched it and then went straight down. This is the price chart for gold, like I said. This is applicable in almost any financial trading, any candlestick market. It will work fine. I'll come right to this supply zone up here, down to 1 hour charts. Right here on the 30-minute charts. Don't feel too impressed with what I'm getting here, but drop this drop. Okay, I'll take this to be my zone. More like this to be my zone. And I'll go back to my daily time frame to see how market reacted off this zone. I would really love to refine this zone into much smaller time frame, but for the purpose, I think what we have was somewhere around here. Okay, and then watch the market reaction down to that 30-minute supply setup and then back down. Now, lastly, I'm going to look into this section. This looks more like a quality setup to me. And once again, I'll go down to 1 hour. Okay, on the 1 hour, we have a rally based drop here. That is more like the only quality setup I can find here. So once again, I'm going to place my horizontal line there and then go back to the daily time frame to see how market reacted along that level. We got the perfect reaction down here and then this corrective leg up before continuing the trend. So that is it with multiple time frame analysis using supply and demand trading method. For today, one thing I want us to know is in doing multiple time frame analysis, there are no standard time frames. Like I said earlier, you could do this on whichever time frame depending on which time frame suits you as a trader. And in doing multiple time frame analysis, pay attention to the higher time frame zones, because higher time frame zones are usually where you get this market reaction. But to get a more precise, a more defined entry, you could go down to smaller time frame to time your entry. Yeah, and you don't want to be trading a lower time frame supply in the higher time frame demand zone. Same way you don't want to be looking for selling opportunities, lower time frame selling opportunities in the higher time frame demand zone. You are most likely going to get wrecked. So that is it for this video. Don't forget, like the video, subscribe to the YouTube channel, and leave a comment below. I personally attend to all comments in